Good morning. This is Mark Soderberg, Senior Ag Market Analyst with ADM Investor Services with the morning ag outlook for Tuesday, July 11th. Overnight prices were mostly higher with the exception of soybean oil, which is currently mixed. After a mixed opening, soybeans are up 20 to 25 cents. Making new highs at the moment. Meal's up $7 to $8 per ton. Corn's up 4 to 5 cents after a lower opening. Wheat is higher across the board. D's corn seems to be building support around the 495 level. However, upside does appear to be limited with crop conditions starting to show signs of improvement. Soybeans continue to be the bullish leader here in the ag complex. 1392 is the next resistance for November soybeans. Yesterday, speculative traders were light sellers in the wheat market of about 1,000 contracts, buyers across the board everywhere else. In corn, bought about 4,500 contracts. In the soy complex, 10,000 beans, 8,000 oil, 2,000 contracts in the meal. Speculative traders continue to be long the entire soy complex while being modest short holders in corn, about 11,000, and short position in Chicago wheat is now down to about 50,000 contracts. Crop conditions yesterday, we did see a 4% improvement in corn to 55%, good to excellent, slightly better than expected. Big increases in Nebraska, Kansas, and South Dakota. In soybean conditions improved only 1% to 51%, good to excellent, and that was slightly below expectations. Both crops conditions right now for this point in the growing season are at their lowest levels since 2012, the last major drought here in the central U.S. Right now, crop conditions in corn to me suggest a yield of about 172.5 bushels per acre. I don't think the USDA will go that low tomorrow in their production report, particularly with the trend improving. And soybean conditions now suggest about a 51 bushel per acre yield. 22% of the corn crop is silking. That's versus the very close to the 5-year average of 21%. 39% of the beans are blooming versus 30% a year ago, and the 5-year average of 35%. 10% of the beans are setting pods. Winter wheat conditions held steady at 40%, good to excellent. However, there was some modest improvement with a shift, 1% shift from good to excellent. And 1% shift from very poor to fair. So I'd argue there's some improvement here. Harvest drags on. Only 46% of the crop has been harvested versus a 5-year average of 59%. I look for a boost in production tomorrow. 1.187 billion is my estimate for winter wheat production. That's up 51 bushels from the USDA June estimate. Spring wheat conditions slipped 1% to 47%, good to excellent, 5th consecutive week of lower ratings here. Weather this week continues to offer best prospects for more rains across the country's midsection, which would include eastern Nebraska, much of Iowa, Missouri, Illinois, through the eastern Corn Belt. Still too dry across the north. Basis levels in South America continue to improve, so that does make the U.S. crops more competitive in the global marketplace for corn and soybeans. So markets will be sensitive to any demand announcements here. USDA report tomorrow at 11 o'clock. So trade could very well sit quietly here the last half of today's session, awaiting tomorrow's important trade update, USDA update. So thank you for listening. I hope you all have a wonderful day.